So do you want to know how you could have traded this whole mess today? Let's get into this. So we had a failed break of high of day, and then we got this big sell-off that was occurring here. And if you were to pull up a Fibonacci extension here, you can see we actually retraced back up to the 50% roughly, and then we started to sell off. Now, let me zoom back out to the 5-minute. So let's get rid of the Fibonacci retracement here, and let's get rid of some of these studies here so we just have the RSI on. We want this nice clean chart so we can see. So if you're following along big picture, we had this big falling wedge on the Dixie that we've discussed in previous videos. We have this coiling pattern on the ADD, so you know that the market is trying to break out. And so we had this big sell-off here. We had a first move down here, second move down here, another bounce. Most of the time, and this is like same thing with like Elliott wave theory. You have a first impulse, a retrace, a second impulse, another retrace, and then you have the bounce back. And so these are one of the days that like I wish that I wasn't working and I could just live stream and actually like day trade, but I was getting notifications all day long. Oh, this is going down, that's going down. So I pulled this up just to take a look at it. And you know, I've got some longer dated puts, so I was like, is this an opportunity to like get out with some cash? So I was following along and I saw this first bullish divergence here, and I was like, okay, well, the market's probably about to bounce here. And I thought, well, maybe I could go ahead and sell that longer dated put and then buy it back for like probably like $100 cheaper. That actually would have been a good idea. But because I have a cash account, I would have had to buy it on unsettled funds, which means there's no way that I could have sold it again. So I just held through this. And of course, we made a lower low. And at that point, I saw this divergence again, which would seem very clear. I actually sold it right around in this area because the market here on the ADD actually looked like it was going to bounce off of this lower support line of the symmetrical triangle. So I sold thinking I could buy it back cheaper, and we had this bit of what looked like a falling wedge pattern. But I'm also keeping in the back of my mind this falling wedge pattern on the Dixie, and that if this gets broken, if that upper resistance line gets broken, the pattern target for Dixie is much higher, and you know that the markets are going to go much lower. I also was keeping in mind, we fulfilled the pattern target here for this big old rising wedge pattern on the overall market. So once you've fulfilled a pattern, there's no guarantee that it's going to continue further. And then we were coming down and retesting the previous resistance line of this ascending channel on the futures. And I thought, well, we might get a bounce there too. And you can even see on the RSI for the 4-hour time frame here that we had a breakout of what is like a symmetrical triangle on the RSI, because these coiling patterns, they break out aggressively. So then I zoomed in on like the 15-minute time frame to see if perhaps this, if Dixie was actually breaking out and then retesting and reconfirming, and that it looked like it was actually confirming. And then over here on the ADD, same thing. ADD actually broke down from that support line, and it looked like this was confirming this symmetrical triangle breakout. But you know, at the same time, we're getting close to this negative 2,000 level, which is very key. Once you get into that level, unless you're having a trending day, a bearish trending day, you're usually going to get a bounce there. So again, I saw the bullish divergence here compared to this, sold, and then I bought back in because I thought, you know what, this is a longer dated thing. Like what's like even like 40 or 50 bucks in long term if the market continues to sell off. One of the other things you always have to watch for, and this is why I love the RSI, is divergences. We had not just a first bullish divergence, but we had our second bullish divergence here. When I got back into that put, I was actually in profit for a little bit. We had what's called a liquidity grab. Check out this big candle here. We actually broke temporarily below this support line and then shot back up. We finally got to a level that the market was like, okay, this is far enough. Around 550.50. You know, it's a decent round number, and then the market took off from there. If you ever see a very explosive move in one direction and then price seemingly just stops, that was probably a liquidity grab. And last but not least, and I'll be the first to admit, I'm not always the best at like using it to day trade, but you got to have the level 2 up. and you got to have time and sales. You need to see what the market is doing and what key levels it's respecting. When you get to a key level and when you see volume spike and you start to see activity picking up on the time and sales. And of course, with level 2, you can check and see how many orders are on the bid and how many are on the ask. I think one of the best tools for this is something called Bookmap. It's not something I have, but I've seen it in action, and oh my gosh, I mean, it's like an open book for reading the markets. And for like any of my followers on Webull, this rising wedge pattern was targeting a pretty big drop, like an 8-point drop. But I had mentioned on Webull that this really could be what's considered the false breakout of this massive rising wedge pattern on the overall market. So one of the longer dated puts that I'm holding in my main account is this 545 put that doesn't expire until the end of the year. And back on July 5th, I bought that for like 1301. And I've actually been underwater for obviously a little while, but we finally got back above that today. And again, so if this is or was a false breakout of this whole big pattern, at the very least, I think what we're going to need to see to stop price action from continuing further is for price to come all the way down here to this main support line of that rising wedge. We could potentially see the price come back up, but I just wanted to hold because you don't know that it's not going to come all the way down here. And then, of course, right after I bought on unsettled funds again, looked like the market got really bullish and pushed back up here. But I'm still glad that I'm holding it, because if the Dixie falling wedge breaks out and this is just a retest here, we've got so much further to go on the Dixie that I think it is going to push the market down even further. So these are the kind of moves that I've been going over in my videos. And so if somebody's curious, like how much money could they have made today if they had actually bought puts on the market, let's go full risky and let's take a look at the 0 DTEs today. Let's go like basically at the money at the beginning of the day. All right, so we can see, and I'm going to switch this down to the 5-minute time frame so we can see all this very clearly. So, near the end of the day, these actually came all the way down to about $100 a piece. But once we got past this first move down, we were up to over 300. Got the pullback, expected pullbacks. Always expect pullbacks when you're trading. Once we got this next leg down, this baby went all the way up to over $600, another pullback all the way up to $800. So easily, if you were trading 0 DTEs, you could have 8x your money today if you just went like at the money. But let's see what would happen if you went maybe a little, let's say 5 strikes out of the money. So we're going to hop up here. Let's look at the 554s. You know they're going to be cheaper at the beginning of the day. Let's see what they were by the end of the day. These babies started out like 12 bucks a piece, ended the day at $3.50. $3 roughly, right around there. So what does that mean? That means you literally could have like 35 extra money today. Why? Because this was such a high standard deviation move. The market doesn't often make moves like this, and the market's built to go up most of the time. So when we have these big explosive sell-offs and you're in the move at the right time, you could potentially like 10x your account, and that's not even using your full account value. If you love trading and investing as much as I do, please make sure to tap that like button. And while you're down there, leave a comment, let me know how you did today. And don't forget that coming out soon is my next video on the overall market analysis, what's going on, rotation, the whole shebang. Best of luck, all you cool cats.